7:41 now. A new year means new money resolutions. And joining us now with investment advice in the new year, Chase Wilsey of Wilsey Asset Management. Chase, good morning.
Good morning. Happy New Year.
Happy New Year to you. So here's the deal. I like that we were talking end of the year. What do we do? But now forget about that. New year, what do we do? Let's start with the basics here. What should people think about in terms of investment and what we should avoid?
Yeah, it's always important to I'm going to say, get a plan in place at the beginning of the year. I want to make sure, you don't have to really worry about your financial situation. Makes the year go a lot better. But some areas that I'm kind of cautious on this year when it comes to investing, and people are going to think I'm crazy here. But the first one I'm pretty cautious on is your big tech companies. And I want to preface this by saying there's a big difference between a good stock and a good company. What I mean by that is a good company at times can become overpriced and it makes it no longer a good stock.
Right.
Two examples of this I'm looking at is Apple and Microsoft. I mean, these companies are up 100 and 140% respectively over the last 2 years. And now they trade at over 30 times future earnings. Wow. Long-term average about 16.8. So very, very pricey on these big tech companies.
What has changed in the last couple of years? Because what makes these big tech companies so risky?
Well, it's again the valuation. So it's not so much the companies are doing bad things. They're doing very good things in society at many points. But the problem is now that's reflected in the stock. And again, everything reverts back to the mean in the long term. So trading at over 30 times earnings, that's not a bargain. What has to happen now is that multiple has to either keep expanding, or if it contracts, the stock would fall if the earnings can't keep up. So that's why I'm concerned about these big tech companies. They've done very well, but I don't think they will do as well going forward.
What about areas that people should consider in the new year?
Yeah, so areas I'm looking at here, I mean, things that are, I'm going to say, out of favor and haven't been as hot as the big tech companies. I like to kind of go against the grain. This includes things like energy, for example. I mean, energy stocks, gosh, they only make up about 2.7% of the S&P 500. And I look at a name like ExxonMobil. Well, Exxon trades at about 11 times earnings and pays close to a 6% dividend. Also, I talk about the financial industry. I think with rising interest rates, the financial companies can be big benefactors of that. Look at a name like Citigroup. Gosh, they trade at 8 times earnings and you get over a 3% dividend yield. Just some big things. And not to mention, I think after the Fed stress test, I think they're going to be able to buy back more stock and increase the dividend further. So some big benefits in these two sectors.
We saw gold up there. Are there any other precious metals? You hear a lot of commercials, buy gold, this, that. Should we consider other precious metals?
I'm going to say this is kind of strange, but I'm not normally a big advocate of gold. And the reason is it's a precious metal. The reason I like gold here is it's generally a good inflation hedge. And I think 2022, we're still going to be ripe for inflation going forward. That's why I like gold. I'm not big on the other precious metals. Just in gold's case, it's for the inflation hedge.
Chase, we thank you for talking to us in the new year. We're going to see what the financial markets do in the next couple of months. It'll be interesting to watch, and we'll talk to you about it as it happens. Chase, thank you. Happy New Year.
Thank you. Happy New Year to you as well.
Fox 5.